I just wanted to say good afternoon and thank everybody for joining us today. My name is Jeremiah DeGullen. I'm a solutions advisor for our risk and insurance vertical here at the Center for Professional and Executive Development. And I'm excited to have you with us as we hear from Professor Danny Bauer about the opportunities and challenges with artificial intelligence and insurance. But before I go ahead and introduce Danny, I'd like to share a few words about the Wisconsin School of Business Center for Professional and Executive Development. CPED offers programs and certificates that will give you the modern, relevant skills needed to advance your career. All of our programs offer interactive live learning sessions facilitated by instructors with practical business experience. CPED also partners with organizations to provide customized professional development programs, coaching, and consulting. For more information about CPED, please visit our website at www.uwcped.org. Now, if you have any questions that you'd like to ask during today's webinar, you can feel free to submit your question using either the chat or Q&A buttons on the bottom of your Zoom webinar screen. We'll post questions that are submitted during the Q&A at the end of today's session. I also want to mention that today's webinar is being recorded. So a link to the recording will be made available to you in the coming day or two. Now, I'd like to introduce our instructor, Danny Bauer. Danny is a professor and currently the chair of the Department of Risk and Insurance at the Wisconsin School of Business. His research is in actuarial science and quantitative economics with a focus on questions in risk management and insurance. Danny is also one of the architects of the current faculty director of the MS in Business Analytics, and he teaches the core machine learning class in the program. So this topic combines his background in insurance on the one side and in the other machine learning and AI on the other. So Danny, welcome. Thanks so much for joining us today and sharing with us your expertise.
All right, thanks very much, Jeremiah. Thank you for the opportunity to present, and thanks to all of you for attending. So we're going to talk a little bit about AI insurance and some of the challenges, and in particular, some of the challenges around algorithmic bias. And this topic is going to be a little bit in the weeds. So as Jeremiah mentioned, it's sort of like regarding one of the verticals that CPED has in insurance. So I apologize beforehand. There's probably people on the call that are much more knowledgeable about this than I am, and probably for them it's not be in the weeds, and that's not going to be in the weeds enough. On the other hand, maybe for a couple of people this is going to be a little technical, but I hope that I will provide some interesting nuggets for many of you. So my plan for the next 40 minutes or so is to tell you a little bit about AI. What is AI about, right? Why is it relevant to insurance? Talk a little bit about applications of artificial intelligence in insurance that, so I've witnessed in the industry over the recent years, and also giving some sense of where this might be going. And then I want to talk a good bit about sort of like some challenges that some insurers have and that some regulators have identified with regards to algorithmic bias and lack of fairness and discrimination that could be the result of these new big data systems and artificial intelligence algorithms. So I'll put a little bit more flesh on the bone as we go, but this is sort of the things I want to talk about. Just to make it known beforehand, there's 4 main points I want to get at, right? And this is sort of like so in some ways the learning objectives of this, right? So at first I want to sort of highlight that AI can do some magical things, right? And I think we're going to witness many more magical things to come Yet it's important to appreciate that AI relies on existing patterns and past data and observations, right? So, that's going to be sort of one of my first points that, yeah, what seems magical is really just digging into existing patterns and available data. As a consequence, AI will perpetuate and possibly even reinforce patterns that are existent in past data. That's what it does, right? It looks at past data and it tries to exploit those patterns in forging predictions. Now, it turns out that modifying algorithms to behave differently from the past, so to cut against these patterns, is difficult or maybe even impossible, right? And so there have been some struggles that I want to share with you recently, for example, by Google that has tried to do this. This motivates this concern about algorithmic bias and fairness in insurance, right? So if what AI does is look at existing patterns and past observations and exploit those for forging predictions, if the world is biased, so will predictive models and algorithms be. That therefore there's sort of this rise or these questions around what should we do about this, and some regulators, as I will share later, have put forward legislation that requires insurers to test and curtail the possibility of bias discrimination in their algorithms. But one of the points that I want to put forward is that this is not trivial, right? That first of all, identifying bias is not easy, but also once you identify some biases, some potential biases, there's no silver bullet. There's different trade-offs, there's different notions of bias, of algorithmic bias, and there's no right or wrong. And if you want to address it, you sort of like have to make some judgment calls. And so what I'm going to try to do in these next minutes is sort of to introduce these trade-offs and these judgment calls to you a little bit. So this is sort of what I'm setting out to do. All right, so let's talk about AI. So when I talk about AI, I do the professor thing, and I sort of go back to the origins of AI, right? So the term artificial intelligence was coined by what is now referred to as the Dartmouth workshops in the 1950s, where a variety of researchers and intellectuals came together to talk about sort of the recent rise in computing and the promises the computing holds for the development of artificial intelligence. And there were neurologists, neuroscientists, computer scientists in the room, and they all sort of conceived this idea of artificial intelligence. One of the people in the room was Marvin Minsky, who you see the second on the top left here, who was one of the most famous computer scientists of the day. Now, Marvin Minsky has been in the press recently for different reasons, but he back then was sort of perceived as one of the experts in computer science on the planet. Now, one of the reasons I like to bring this up is that Marvin Minsky in 1970 mentioned that from 3 to 8 years, we will have a machine with the general intelligence of an average human being. Now, I don't know if you've been around in the late 70s, but it turns out that did not ring through, right? So even today, one could argue that we do not yet have a machine with the general intelligence of an average human being, right? So Marvin Minsky was utterly wrong. I think it is helpful, right? Because he was, again, one of the most brilliant computer scientists on the planet, right? So today, when somebody who seems to be very knowledgeable and seems to know a lot about, ML or AI makes these predictions, I think we should take them with a grain of salt, right? Because predicting the future, as this quote makes clear, is very hard, right? But there's a second quote I like to bring up in this context, and that's by Michael Jordan. Not the Michael Jordan of the Chicago Bulls, but Michael Jordan of Berkeley University, a computer scientist who wrote this essay in 2019, so a couple of years ago now. And the title of this essay is "Artificial Intelligence: The Revolution is Yet to Come." And in this essay, it's a very nice piece. There's the link right there. Michael Jordan sort of goes through some personal experience. It's very interesting. And I'm going to read you off this quote from Michael Jordan's essay, that people are confused about the meaning of AI, that there's some kind of intelligent thought in computers competing with humans. We don't have that. Most of what is labeled AI today is actually machine learning. And machine learning refers to finding patterns in data and on making well-founded predictions. Now, that second part of Michael Jordan's quote has aged very well and is still true today. Most successful AI today is machine learning, and machine learning is nothing else than a very fancy form of predictive model. So what is a predictive model? What does it mean to finding patterns in data and making well-founded predictions? Well, we've done this in insurance for a long time, right? So I'm going to get a little technical here and talk about X variables and Y variables. And what predictive models do is they use characteristics of a situation, which I'm going to refer to as X variables, to predict the value of an outcome of interest, which I'm going to refer to as the Y variable. Think, for example, about X variables being the age of a driver, what car they drive, where they live, and the Y variable, how many accidents they're predicted to get into in the next year. Right? So, for example, if you drive a Nissan Leaf, 2013 Nissan Leaf, and you live on the west side of Madison, and you're 45 years old, right? And you want to predict how many accidents that person will get into, you could look at historical data. Okay, how many 45-year-olds that drive that kind of car got into accidents in the past? And you can use past information to make predictions about the future, right? So prediction models use these X's and Y combinations, so historical information on characteristics and outcomes, to pick up on tendencies and patterns in historical data to predict a situation in the future. The simplest predictive model is what is referred to as a simple linear regression model. A linear regression model says, well, maybe the simplest relationship I can conceive if I only have a single predictor variable, so a single X and a single outcome variable, so for example, a single Y, the simplest relationship I can conceive is that of a linear relationship, so a line. Right? So for example, here, I have home coverage limits on the x-axis and the annual premium on the y-axis, and you can see as the home coverage limit in past data, that's what these bubbles are, as the home coverage limit is higher, the premiums tended to be higher. Now I can, if I want to make a prediction, well, how much does somebody who has a home coverage limit of, say, 400,000, how much would they have to pay, right? I can look at this red line, right? That's the line that sort of connects the data, and predict that, yeah, the premium might be roughly, maybe $1,200, maybe $1,200, right? So what prediction models do, right? At least these simple prediction models, is they take past information on these X variables, characteristics of a situation, and the Y variables, the outcomes. They put together a model. Here, a very simple model, only two parameters, namely an intercept, that's alpha, and a slope, that's beta. And they connect the model to be in line with past observations of the data. Now, what's changed over the last 20, 30 years is that we've gotten much more sophisticated at these predictive models, right? So traditionally, we ran these linear regression models, right? But we've sort of like the rise in computing, the abilities of modern computers, and also the proliferation of more and more data gave us the abilities to build much more sophisticated model, even though in principle, these models still do the very same thing. They take past data, X and Y combinations, and they try to draw some line through it, right? So this comic sort of draws home that point that, a lot of times when people, so I have a friend who's a management consultant, he says, well, if we pitch a project, a lot of times we talk about our AI team. When we write up the statement of work, we talk about, oh, we're going to run machine learning models to solve this problem. And what we end up doing is run a logistic regression model. Right? So this is still to stay. But again, the sophistication of these models has increased dramatically. in part driven by the power of modern computing. So while traditionally we ran these linear regression and maybe logistic regression models that were sort of driven by mathematical convenience, it's relatively easy to back out the parameters alpha and beta here. We now run models that are much more sophisticated. So they don't only have two parameters like this alpha and the beta here, but many more parameters. And in fact, some of the most successful models out there are modeled after the human brain. These are so-called deep learning or neural network models, and neural network models are the backbone behind deep learning, what drives most modern AI. But still, it's helpful to think about these as just, more complex, souped up versions of the simple regression model, right? It's an algorithm that gets you from X to Y. And in order to fit the algorithm, in order to find appropriate weights in these deep learning models, you do essentially the same thing as you do with a simple linear regression model. Namely, you look at past data and you try to find models that fit the past data in some optimal sense. And then you can use these to make future predictions. It turns out that's also the technology behind AI models such as ChatGPT. Behind ChatGPT is nothing else than a fancy neural network model that connects X's and Y's. Now you might say, well, what is the X and what is the Y in this context? We'll talk about this in a second. So I'm going to show you some interesting graphs from, and I'm going to take these from this book by Stephen Wolfram, who's a brilliant man, who's written this little booklet, What is ChatGPT Doing and Why Does It Work? If you Google it, it's available for free. If you have some interest on how ChatGPT really does work, and that's a really, really fun and interesting resource, right? So here's sort of like how ChatGPT relates to the simple XY algorithm. So first of all, ChatGPT is much more complex than a simple linear regression model. Recall the simple linear regression model had two parameters, an intercept and a slope. ChatGPT, or rather GPT-4, has 1.76 trillion parameters. So there's many more different ways that model can operate. So it's much, much more complex. But in the end, it still tries to do the same thing. Namely, it tries to look at existing data and match patterns in existing data as best as possible. And it turns out that it relies on the internet as a gigantic set of data. Now, what is the X and what is the Y variable? It turns out that the X variable are sequences of words. So for example, if you think about an X variable, right? So a characteristic of a situation consisting of 8 words, right? So you can sort of think about the X variable being the best thing about AI is its ability to, I don't know if that's 8 or 9 words, and now the Y variable is based on the entirety of the internet, the word that is likely to come next. Now it turns out, and this is actually from ChatGPT, this is GPT-2, so an earlier version, so that you can run it on a desktop machine. But the next likely word based on a training set is learn. The second most likely word is predict. The third most likely word is make. The fourth most likely word, based on the observations, all the observations, the entirety of the internet, is understand. So what ChatGPT does is essentially just say, okay, these are the characteristics of my situation. What is the most likely next word? Learn. If I then feed the algorithm with these 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 words, the best thing about AI, it's its ability to learn. The most likely next word is from. And the most next likely word is experience. The most next likely word is it. So that's how it puts together these sentences, right? It essentially uses the internet as a training parameter. Now, ChatGPT has some interesting knobs. So it turns out that it doesn't always use the most likely word, as is depicted here on the right, but it essentially rolls a die, and that die roll is controlled by what is called a temperature parameter. But in a nutshell, ChatGPT is nothing else than a predictive model that uses existing information to predict the next word. And this is sort of where I like to come back to Michael Jordan's quote. So Michael Jordan is right that most of what is labeled AI today is still machine learning, which is nothing else than finding patterns in data and on making well-founded predictions. But it's unclear whether that doesn't actually constitute intelligent thought, right? So maybe our notions of intelligent thought are changing, and that's to some extent what Stephen Wolfram brings home in this book. Namely, he says that even though we know how these models are being built, interrogating these models, understanding what's going on under the hood is really complex. So this is a quote from his writing. In effect, when we're opening up the brain of ChatGPT, we're discovering that it's very complicated in there and that we don't understand it, even though in the end it's producing recognizable human language. Now, why am I telling you this? For a couple of reasons. The first reason is to give you a little bit of a sense where this is going. I'm gonna walk you through this picture, which is a little bit complicated, but I think I find it very interesting. That picture is taken from one of the machine learning Bibles. This book is called Deep Learning. It's by Ian Goodfellow, Joshua Bengio, and Aaron Correll. And so I took this graph from this book, and I'm going to walk you through it because I think it's very interesting, and I modified it just a little bit. So what you see on the x-axis, on the horizontal, is time. So you have 1950, 1985, 2000, 2015. And what you see on the y-axis is number of neurons. Now, essentially think about it as the number of parameters. Remember earlier we talked about linear regression models only have about 2 parameters, right? But ChatGPT or GPT-4 has 1.76 trillion parameters, right? So what you can see here is that the y-axis is on a logarithmic scale. So it doesn't go from 10 to 20 to 30, but it goes from 10 to 100 to 1,000 to 10,000 to 100,000 to 1,000,000, right? So even though this looks like a linear trend, really, if you didn't have this logarithmic scale, you would see an exponential trend, right? So now what you see on the right-hand side here are essentially the sizes of parameters in the brains of different organisms. So you can see a roundworm, right, has a smaller brain than a leech, has a smaller brain than an ant, which has a smaller brain than a frog, right? And you can see they get much more complicated, right? So while a roundworm only has a brain with about 100 parameters or neural connections or neurons, a bee has a brain with close to 1,000,000 neurons or neural connections. Think about it as parameters, right? And humans have much more complicated brains, and octopi also have relatively complicated brains. Now, what you also see on this picture are a bunch of these dots. And what these dots are different models built by humans that try to mimic these neural network models that I alluded to earlier, these deep learning models that essentially try to mimic the functionality of a brain. And so what you see here is that, early on in the 50s, we built relatively simple models. Right? Some of these models are really interesting. So for example, and let me just look up at a model number 8 here, right? So that was built in the 90s, is a model that's called the so-called Linnet model, and that was used by the U.S. Post Office, very early adopter of neural networks of deep learning, and for digit recognition of handwritten digits on postcards and letters, right? So a lot of organizations sort of picked up these models relatively early. That was built by Jan LeCun, who aside from Ian Goodfellow and Joshua Benjo, is another big mind in this machine learning space. So, but why am I showing you this? Right? So essentially, what you can see is that over time, humans have built more and more complex models. Right? So these are all models built by humans. And some of these models have started competing with the complexity in the brain of a bee or even a frog. Now, ChatGPT or GPT-4 and some of the more recent models actually start competing, and this is one of the bullets that I added, start competing with the size of human brains, or at least go beyond the brains of octopi. Now, you can argue where the start should be exactly. But so what I'm trying to get at this is that this is not going to stop. Right, so this trend is going to continue to increase, and before too long, some of these artificial models, right, will be at least more complex than brains of humans. That doesn't mean they're better. That doesn't mean they're bigger, because so maybe our brains might be optimal from some other perspective. This is only one metric, namely the number of neurons. Right. But at the same time, right, this is not going to stop. Right. So AI is going to be able to solve more and more complex problems. And this is sort of like where it's going to get interesting for insurance, right? Because in insurance, we have used predictive models for a long time, right? There's a very long history of using predictive models in insurance. In fact, right, some of the earliest adopters of predictive models have been in insurance. For example, in claims prediction, right? So think about an auto rating model, right? So I mentioned that earlier, right? So in an auto rating model, what you do is you use existing information of drivers from the past that have gotten into accidents, and you look at their characteristics. How old are they? What sex do they have? What's their sex? What's their type of car? What's the accident history? Where do they live? Do they park in a garage, etc.? And you look at the number of claims. So how many accidents have they gotten into, and what were their claim amounts, right? So that presents this labeled data, these XY's combinations, and you can look at historical data, right? How many people that drove that are 45 are male, have a 2013 Nissan, 2011 Nissan Leaf, and live in West Madison. How many accidents have they gotten into historically, right? You can start building these models, right? So we've done that for a long time. Now, what's more recent, right? So maybe so out of the last 10 to 20 years, right, is that with improvements in these predictive models, right, we're able to solve predictive tasks that go beyond simple numerical inputs and simple numerical outcomes. One helpful example in insurance are, for example, subrogation decisions. So for those who don't know, subrogation refers to a process where you look through a claim and you look whether it's worth litigating with the other party, right? Whether you should go after the other insurance company in order to, and there's a decision to be made whether you should litigate or not, right? So do you just pay and accept yourself as the faulty party, or should you try to get some money back from the other party, right? So historically, this task was done by humans, right? So there was a subrogation team that looked at the claims report, right? Maybe did some interviews, talked to the people that were involved in the accident, and then made a decision. Okay, if this was a single party, there is no other party to go after, so clearly we can't subrogate. Like on the other hand, if somebody hit our party from the rear, then we definitely should subrogate, right? So now what's what's been done in the last, 15, 20 years, and I'm sure many of people that are in the room are aware of this, is that these kind of processes are taken over more and more, or at least helped by algorithms. Right? Algorithms are fed with information about the accident, for example, claims reports, etc. And then based on the accidents and past subrogation decisions, an algorithm could say, well, this is a clear subrogate or not subrogate, right? So you use past subrogation decisions in order to train algorithms to rule out sort of the obvious cases. Now, there's still a subrogation team in place. So all of the cases where the algorithm says, I'm not sure, could go either way, right? You have the human in the loop, and they look at it, right? But at least that makes the humans much more efficient because it filters out all the obvious cases, right? So in fact, subrogation is a good example because it shows that a lot of these modern machine learning models originate from combining robotic process automations, drawing documents from different sources, right? Digitization and so on, and then having a machine learning model in the middle predicting whether to subrogate or not. Right? But importantly, again, the reason that insurers are able to do this is that there is existing data on past subrogation decisions that can be leveraged in order to build a predictive model about future subrogation. Now, the next generation of AI models in insurance leverages these Gen AI models, right? So, and in fact, there's a lot of working papers out there that say, well, you can actually use ChatGPT and these multimodal models to get assessments of how severe damages is in cars. They can be used in automatic claims filing and automatic claims reporting. But again, importantly, right, and this is sort of like helpful to keep in mind, right? What ChatGPT and other AI solutions are built based on is past information, so existing information, and they do nothing else than extracting patterns from observations in the past in order to get to predictions about the future. And that's an important consequence, namely that predictive models, or an important message, namely that predictive models, ML or AI generally, rely on existing patterns in past data. So that means that the predictions automatically inherit potential biases existing in training data. And here's an example that I took from one of my colleagues, Alan Lee, here at the business school. Who played around with ChatGPT and says, well, if you ask ChatGPT, Paris is to France as Tokyo is to, then ChatGPT would say Japan. Now, if you ask ChatGPT, well, man is to computer programmer as woman is to X. ChatGPT came back with X being homemaker, right? Which that doesn't feel right, right? Because it's stereotypes. But in some ways, that's exactly what these AI solutions do. They look at historical data, right? And they work with patterns. So they stereotype. That's exactly what they do, right? And if in existing data, there are patterns that we don't want to propagate, right? It's difficult to tell these machine learning models no, because they don't know right from wrong. That exact argument is one made by Cathy O'Neil, who's one of the loud voices, and I mean that in a positive sense, in a space. She's written these books about weapons of math destruction. And what Cathy O'Neil's thesis is that, if we're living in a biased world, if there are patterns in data that we don't want to propagate, algorithms don't know. They don't know right from wrong, right? They just will use these existing patterns, right? And use them to forge future predictions. And in fact, in contrast to humans, they might actually double down on them. So what Cathy O'Neil says, that they might not only propagate existing biases, but they might actually reinforce them, right? Because, if there's, 5 humans that have made past decisions, 4 of them were unbiased, but one of them was biased, and you feed that training data to an algorithm, it will pick up on that bias and will then make that decision in the future for all the situations, right? So that's a potential problem. So that's sort of like what I think substantiates this concern with regards to algorithmic bias in algorithms. And it turns out that it's really hard to tell the algorithms to not do that, right? So remember, I showed you earlier this quote from Stephen Wolfram, that even though we built ChatGPT, when we slice it open, when we look at the brain of ChatGPT, it's complex in there. We don't really know what's going on in there. And that's sort of like what makes it really tricky to tell these algorithms what to do. One company that has sort of like gotten in hot waters over this recently is Google. So Google, right, big tech company, but also sort of like, like known for trying to do the right thing, right? They were sort of lagging behind OpenAI and some of the other companies with regards to AI, in part because Google was worried about this. And Google wanted its AI, which is called Gemini, to make better decisions, to not have properties like ChatGPT has that Ellen mentioned. So they put guardrails on to avoid bias. But it turns out that these guardrails produce some funky results. So for example, and this was, if you heard about this, if you asked the Google AI, so Gemini, about pictures of the founding fathers, right? They provided depictions of showing the founding fathers as being of Asian or of African American descent. It provided pictures of the current pope being female or of African American descent, right? So that's what the Trump so Google tried to do the right thing in quotation marks, right, by avoiding some of these biases in their AI solutions by putting guardrails on, but these guardrails automatically led to very questionable depictions. And Google was in a lot of trouble over this and still is to some extent. So this was only a month or two ago. You can see this is from February 2024 and March. And they sort of like they pulled back a little bit, right? And so you can see here in the Washington Post, right? Female popes, Google's amusing AI bias underscores a serious problem, right? It's sort of difficult to put these guardrails on because fundamentally these models are very difficult to understand. Or here, Google's Gemini's bias problem is just the start in AI diversity disasters. So this is sort of like what triggered some of these concerns around algorithmic bias in insurance. So if past claims data and past data and external consumer data that is being used for making insurance rates or for deciding whether somebody's supposed to get insurance or not, if these past decisions have biases in there, insurance algorithms might propagate, possibly even reinforce these biases. And a lot of consumer advocates have sort of like have picked this up and said, well, that's a problem. Right. And there have been some responses on this on the legislative front. For example, one of the most prominent examples is Colorado Senate Bill 21-169 that protects consumers from unfair discrimination in insurance practices. So here you can see Governor Polis signed this bill into law, which protects Colorado consumers from insurance practices that result in unfair discrimination on the basis of race, color, national or ethnic origin, religion, sex, sexual orientation, disability, gender, and identity or gender expression. The legislation holds insurers accountable for testing their big data systems, including external consumer data and information sources, algorithms, and predictive models, to ensure that they are not unfairly discriminating against consumers on the basis of a protected class. Right. So this has But there's a lot of debate about this, right? So obviously, consumer advocacy groups have said their piece, but also some industry groups, some lobbying firms. Here, this is from the American Academy of Actuaries, right? So a lot of people have weighed in, and sort of like what I want to spend the next and last 10, 15 minutes of my presentation on is to sort of talk about, okay, so what does it mean for an algorithm to be unfairly biased? And in fact, I want to point out that this is actually kind of a tricky question, and addressing it is a fairly tricky question. This is sort of like the last thing I want to sort of like the last point I want to drive home, right? So when you talk about algorithms making decisions about and for humans, right, you should think about the ethical ramifications, right? And AI ethics are broader than just this question of algorithmic fairness and bias. I've spoken about this with some of my friends and a person I deeply admire, Jim Gucha, who's on the top right here. And he always makes this point that, like when you talk about AI ethics, you should think about it more broadly than just thinking about AI algorithmic fairness and bias. But for the purposes of this conversation, I'm just sort of like focusing on that piece, even though there's other pieces that I'm going to blend out. Right? So if you think about justice as an ethical principle, right? So fairness regards justice. And there's different notions of justice. One notion of justice is fair procedures. Everybody should be subject to the same procedure. Another notion of fairness is to talk about the outcomes and the distributions. Hey, different parts of society, right, should not be disadvantaged by certain rules. And what I'm going to try to make clear is that these two objectives, procedural fairness and distributive fairness, have analogs in the insurance space, important analogs in the insurance space, and that to some extent, they're pushing against each other. So in as many situations, you cannot satisfy both of them, which is tricky and requires trade-offs. So traditionally, when we talked about fairness in insurance, we talked about actuarial fairness. And for example, the Casualty Actuarial Society, so the main society for property and casualty actuaries, defines a rate, right? So an insurance price as reasonable and not excessive, inadequate, or unfairly discriminatory if it's an actually sound estimate of the expected value of all future costs associated with an individual risk transfer. So essentially, just means it should be reflective of the risk that people. The insurance price should reflect the risk that that an individual claim causes. Right, but is that enough? Can we just say, okay, as soon as we're sort of like, taking past information, and as soon as we're not, as the algorithm sort of treats everybody the same, right, and represents a fair estimate of the expected value of the claims, is that good enough? And I will show you that probably the answer is no. Okay, why is that? Well, I'm gonna leave the space of insurance for a second, but I want to come back to insurance in a second by talking about a very well-known algorithmic bias case study, namely that of the Wisconsin Supreme Court. So judges in Wisconsin, so this is from 2016, have the ability to rely on, or as for support, rely on algorithms that provide an estimate on how likely a felon is to reoffend. Right? So in their decisions about parole, they can rely on this algorithm. The algorithm tells them how likely a person is to reoffend. And now, like if somebody's very likely to reoffend, a judge might be less likely to grant them parole than if they're not very likely to reoffend, in which case maybe the judge is more likely to grant them parole. This is not mine. This is a famous case study, and in fact, this is a data set that's available, and me and my students have explored that data set a lot, right? So in that data set, you can look at existing outcomes of felons, whether they reoffended, yes or no, and what the algorithm predicted, would they reoffend or not. And you can see in many situations, the algorithm actually did predict that that first person is going to reoffend. It predicted that the next two people would not reoffend. So here it predicted zeros, and it was actually a no for the fourth and fifth person. It predicted that they would reoffend, and they did reoffend, right? So the algorithm doesn't seem to be awful, but it does make mistakes, right? So here for the sixth data point, it predicted that there would be no reoffense, but then that felon ended up reoffending, right? What I'm showing you on the right-hand side is the average score of the algorithm, namely, it's separated by two racial classes, namely Caucasians and African Americans. And the algorithm, and that's in line with the actual evidence about reoffending. There ended up being more people reoffending in the African American group than in the Caucasian group. Again, this was in the data, right? This is not an opinion. This is just in the data. So now if you try to build, if you look at how accurate the model is for these two subgroups, so for Caucasians and African Americans, you can look, okay, how many times do I have it right? Right? And there's two ways of getting it wrong. Either somebody did reoffend, and the algorithm said they wouldn't reoffend, or they did not reoffend, but the algorithm they said they would reoffend, right? So there's sort of two ways to be wrong, right? There's also two ways to be right. Namely, the algorithm said they did reoffend and they ended up reoffending, and the algorithm said they would not reoffend and they didn't end up reoffending, right? So there's two ways to be right and two ways to be wrong. Now, if you look at the aggregate, how many times was the algorithm right? So this, in technical terms, these are true positives and true negatives. You can see that the algorithm had a roughly 65% accuracy. So in 65% of all cases, for both groups, the algorithm predicted that the correct result. So either the algorithm predicted did not reoffend and they ended up not reoffending, or the algorithm predicted they would reoffend and they ended up reoffending. Now, unfortunately, or because the base rates of reoffending were the same, this was sort of like differently distributed across different types of decisions. And it turns out that if we look at false positive rates, so false positive rates count how often did the algorithm say they would reoffend, but they ended up not reoffending. So how often was the algorithm wrong in that direction? That proportion was much higher for African Americans than for Caucasian, even though the total accuracy was the same. Now, this is exactly what ProPublica in their case study claimed is a big problem, and arguably is a big problem. But because if you translate what this graph shows you, like this graph on the right-hand side, it says that that predictions failed differently for Black defendants relative to African Americans. Namely, out of the people that were labeled high risk but did not end up reoffending, so they were unjustly labeled high risk, that was only 23% for whites, whereas it was 44.9% for African Americans. That's exactly what you see on this graph here on the right-hand side, right? And there is another metric you could look at, right? So, so here's sort of like where this is becoming tricky, right? The algorithm was equally accurate on the left-hand side for both groups, right? But according to a different metric, right, it was biased against one of the subgroups. right? What does that have to do with insurance? Well, in insurance, the same things can play out. So here I'm looking at an insurance data set, and in that insurance data set, I don't have any information on racial background, but I do have information on job class. So I can look at people that are white collar workers or blue collar workers. So here I'm going to look separately at blue collar workers and other workers. So this is a public data set. This is sort of like a well-known data set that, again, me and my students sort of play around with a good bit. And if you look at that data set, something very similar can start happening. Namely, if you build a predictive model, as actuaries typically do, right? So a predictive model that, in line with actuarial fairness, is trying to represent a best possible estimate of the likely claims a claimant would cause, right? You would build a model that, that is here's sort of like the percent of correctly accurate, correctly classified cases. You'd build a model that is, like maybe 70-ish% accurate, 65, 70-ish% accurate for the blue collar group and the other group. So here it turns out that the algorithm actually is a little less accurate for the blue collar group. But again, sort of in direct analogy to the example from before, if you look at how the algorithm went wrong, it turns out that it was much more penalizing to blue-collar workers than to white-collar workers. Namely, there are about 12% of blue-collar workers that were erroneously labeled high risk, whereas it was only about 6% for the non-blue collar. So again, when putting together this algorithm, right, I just tried to build an accurate algorithm. I didn't try to build an algorithm that was biased, but it ended up being biased against blue collar workers by looking at this particular metric. And this is sort of where it becomes tricky, right? Because it's not clear cut. Right? So if you think about a fair procedure, my algorithm certainly was a procedurally fair algorithm, right? I built the algorithm sort of like I built a predictive model, and the way actuaries typically build predictive models, but from a distributive perspective, right, it was sort of like penalizing blue collar workers, right? So is that just? Is that not just? It's unclear. It depends on your notion of justice. Do we care about fair procedures? Or do we care about equal outcomes from a distributive sense? So that trade-off is difficult to navigate. There is no right and there is no wrong, right? And it turns out that, so here I'm showing you false positive rates, but I could also show you false negative rates or other rates, right? So determining which metric one should optimize for, what metric defines fairness in the first place, is not clear. There's some research on this. For example, there's this well-known fairness tree by some researchers in a public policy domain, but it's unclear, right? Also, if you enforce fairness, so if we tried to make this algorithm or this algorithm fair, we'd have to give up some model accuracy, because this model was trained as the most accurate model, right? So how much accuracy are we willing to give up in order to have a fairer model by a given metric? Again, it's not clear. There is no right or wrong here, right? So this sort of brings me to the conclusion, right? So fairness is in what fairness means and how to make an algorithm fair is actually tricky, right? Because there is not one unique notion of fairness. And depending on what insurance line you're thinking about, right, fairness might be more or less important. So all of this is going to require humans to make judgments, right? So there is no silver bullet. There is no one way you can measure fairness or enforce fairness. But you need humans sort of like thinking through this and making judgment calls. So I know this is kind of like a little sad way to end this, that there's no obvious ways for avoiding bias and fairness based on algorithms. in the insurance domain or in other domains. But nonetheless, I think in order to have like an honest conversation about this, right, it's helpful to understand these trade-offs. Again, I apologize for going in the weeds there a little bit, and I was also a little long, but I'll end it there. Thank you, Jeremiah.
Ah, no, thank you, Danny. Appreciate it. And before we open it up to the question and answer, I just wanted to let all of our attendees know that CPIT is ready to help your organization with both strategy and data analysis development behind AI and your insurance organization. I would personally love to set up a time to talk with you all about custom consulting, coaching, professional development programs, in strategy, change management, and certainly a whole lot more. My email is on this slide, jeremiah.degullen@uwcped.org. And I look forward to further exploring all these opportunities with you and for your organization. So, Danny, now we'll open it up here for questions. We had a couple of questions
Yeah,
come.
so do you want
I'm
me to
sorry, go
take
ahead.
those? Yeah,
What's
okay.
that?
Yeah. So let's start with those, no?
Yeah, I had a couple of questions here from participants here. Um, so the first one is, if AI uses patterns of past data and observations, how does it adjust or account for abnormality patterns impact? Example, during the pandemic or major depressions, economic downturns, etc.
I mean, it's a really good question, and it's sort of like it dovetails a little bit with this bias question, right? So, I mean, so data curation and putting together the right data for a predictive model is, like that's challenging, right? And in some ways, and I think Wade, you sort of like hitting the nail on the head here, is that these predictive models are sort of like as good as their data and as relevant as their data, right? So sometimes when I talk to my students about this, I talk about the garbage in, garbage out concept, right? So if you throw faulty, problematic, irrelevant data into the algorithm, the prediction it produces will be, not useful or irrelevant, right? So in particular, if you think about, for example, staffing models during COVID, or even staffing models in a post-COVID world where working patterns have changed, right? That provides a major challenge, right? So I think the answer here is smart data curation, right? You need to sort of like have a good feel for these algorithms and use relevant data, but it's, again, there's no simple answer to this question. Very good observation.
Yeah, the question we're all trying to answer right now. Danny, you and I, we work with a lot of different organizations, a lot of different departments within decentralized organizations. And I guess from Anne's perspective, she has a question about what operational areas in an insurance company, besides actuarial, do you feel are the ripest or the low-hanging fruit for a implementation of AI and leveraging AI?
So that's a good question. So I'm gonna answer it slightly more broadly, right? So I mean, over the last decade, there's always these questions or stories about sort of like fundamental disruption in insurance, and that insurance 2.0 digital transformation. And my sense is that at least for now, I haven't seen insurance fundamentally change, right? So it's still so maybe usage-based insurance, and some of the recent trends towards risk mitigation are important, right? So like people having monitors in their house that control surges or control floods, right? I think technology has a role to play there. But so what I've witnessed, so like the more successful technology companies that I've seen, and we have actually the so-called Creative Destruction Lab here at Wisconsin in my department, that is a breeder for early stage startups in insurance technology. And a lot of the things that I see that sort of like really work with the venture capitalists and the experts in that company are companies that solve problems. So for example, if you think about if you think about AI being used or technology being used at reducing the time from claim to, like if there's bidders involved, like for example, and people that, that need to make bids in order to assess how big a damage is on a house or on a roof, right? How do you use technology to make this process more frictionless? Like how do you take out frictions? And so I think those are sort of like as I sort of alluded to earlier, these concepts where you can use sort of process automation and a little bit of machine learning here and there to make processes flow that have multiple stakeholders and flow more quickly. I think these are sort of like, I think some of the areas where I see most excitement in sort of like the startup world. Like, I don't know if that provides a good answer, but I think it's less about sort of like fundamentally changing, like the insurance industry. It's more about sort of like making these processes that, traditionally have been cumbersome, making these more efficient.
Wonderful. Well, Danny, that gives us time. Thank you so much for sharing your expertise and joining us today. And I want to thank our audience for hanging in there and joining us today. And if there's anything that we can do to support you, feel free to reach out. My email is on the screen. If you have any questions or want to just follow up with Danny and I, just please feel free to shoot me an email. Once again, thank you so much, everyone, for attending. And thank you, Danny, and have a great day.